Good morning, everyone. So our today's topic is advanced tax deduction at source and tax collection at source. Now, what is advanced tax? What is TDS? And what is TCS? Okay, so let us discuss first three things. What is advanced tax? What is TDS? And what is TCS? So advanced tax liability comes when your final tax liability after TDS and TCS is more than 10,000, then you are required to pay advance tax to the government. Now the name itself suggests advance. Okay, so you have to pay this tax in advance. Generally, what we are doing, we are calculating our final tax liability after completion of previous year, right? Because after completion of previous year, we know that of what is our final income and what is the liability. But during previous year, you have to pay tax on your estimated income, that is called advance tax, because we are paying this tax during previous year, during the year in which income earned. Okay. Now, what is TDS? So, my dear friend, TDS is tax deducted at source. When the pay, say for example, if you are generating any invoice, say for example, a chartered accountant provides service to X company. Okay, so a chartered accountant will generate the invoice for professional fees to the X company. Now the X company will deduct, say for example, the bill amount is 50,000. Okay, so the payer, that is the X company, X Limited. X Limited will deduct TDS at the rate of 5%, that comes to 5,000, and deposit this 5,000 to the account of government on behalf of chartered accountant. Okay, so that is called as TCS, TDS, and TCS means tax collected at source. TCS, buyer will pay to the seller at the time of purchase. That means seller will collect the TCS from the buyer. Clear, everyone? What is advance tax, what is TDS, and what is TCS? Advance tax you are paying itself. Say for example, Mr. X is paying directly to the government during the previous year, that is advance tax. Payer will deduct tax and deposit on your behalf to the government, that is TDS, and seller will collect TCS and deposit to the government on your behalf. Clear, everyone? What is advance tax? Meaning is clear? So in this chapter, we will learn various sections for advance tax, for TDS and for TCS. TDS is deposited by payer on behalf of payee. That's why it is called as tax deducted at source, because before you are receiving payment, the payer will deduct tax. Okay, and advance tax is you are required to pay quarterly. That we will discuss later. That's why there is a difference between advance tax and TDS. TDS will be paid by payer on your behalf, on behalf of payee, and advance tax is paid by yourself only to the government. Clear? Chalo. Now, tax deduction at source and advance payment is covered under section 190. See, as I have explained, direct payment, that means advance tax is a direct payment. You are directly paying to the government. Same as self-assessment tax. Now, what is self-assessment tax? Self-assessment tax you are paying after completion of previous year. That is self-assessment tax. So self-assessment tax is also you are paying directly to the government. Now, why advance tax and why TDS and TCS? So government require regular flow of income. That's why you are required to pay tax for the entire year. Is that clear, everyone? Now, on those income on which TDS is not required to be deducted, you have to pay self-assessment tax or advance tax. Say, for example, your business receipts. Okay, there are many sections for tax deduction at source. So first, we will discuss what are the section for TDS. The first section is section 192. I will request everyone to. TDS is paid by payer on behalf of payee. Say, for example, as a chartered accountant, I will generate the bill of 50,000. Then the payer will pay to me 45,000 and 5,000 on my behalf. He or she will deposit to the government. So when I will calculate my final tax liability, I offer the income of 50,000 and I calculate or tax on the same. So say, for example, my tax liability comes to 15,000, but 5,000 is already deposited by payer to the government on my behalf. So now balance 10,000 are required to pay to the government. Now I will request the summary I will return here. So make notes for yourself. So section 192 is TDS on salary. Now, when TDS on salary comes, when there is an employer and employee relationship. Now here, who is payer? Payer is employer, right? And who is payee? Recipient of salary, employee, right? Here, the employer, while making payment of salary to the employee, the employer will deduct tax and deposit the tax on behalf of employee to the government. Now, what is the rate of TDS? What will be the amount required to be deducted by the employer? So the rate of TDS here is average rate as prescribed in Finance Act. Okay, so every year in Finance Act, slab rates are provided. So TDS is required on salary is required to be deducted at average rate. Now, how the average rate will be calculated, that I'll explain. Now, when TDS is required to be deducted? So here the TDS is required to be deducted at the time of payment. So when the employer make payment of salary to employee, at that time, the employer will deduct tax from the salary and deposit the tax on behalf of employee to the government. Now, how the tax is calculated? Say, for example, a person's net taxable salary is 10 lakh. After every deduction, like ATC, 50,000 standard deduction, professional tax, everything. After deduction of everything, the salary is 10 lakh. Okay. So now what will be the tax on 10 lakh rupees? So as per the slab rate, up to 2.5 lakh, nil, 2.5 lakhs to 5 lakh, 5%, that is 12,500. And 5 lakh to 10 lakhs, it is 20%. So it comes to 1 lakh. For rounding of purpose, ignore the cess. So now my tax liability comes to 1,12,500 for the year. Okay. My tax liabilities comes to 1,12,500 for the year. Now it is for entire year, right? So the salary is for 12 months. So what my employer will do, my employer will deduct 1,12,500 divided by 12 months. So what is the answer, everyone? Per month, what is the amount of TDS? Everyone, what is the answer? 1,12,500 divided by 12 months. It comes to, tell me everyone. 9375. So my employer will deduct 9375 per month from my salary every month and deposit the same to the government. So say for example, my only source of income is this 10 lakh rupees. Okay. So now the entire tax liability is deposited by employer to the government from my salary. Okay. So when I will file my return of income, I am not required to pay any additional tax to the government. Okay. Now the how you will calculate the average rate. So tax liability, that is 1,12,500 divided by 10 lakh rupees salary into 100. That is the average rate, the percentage. Okay. Everyone clear with this? Yes or no? Everyone, please answer fast. Yes, 9375 per month is TDS required to be deducted by employer on behalf of employee from salary income. Everyone clear with this? Yes or no? Yes, next taxable salary includes everything, the taxable perquisite, the taxable allowances after 50,000 standard deduction, after 2,400 professional tax, each and everything. So this section casts an obligation on every person responsible for paying income chargeable to tax under the head salary. Now, who is responsible for paying the income chargeable under the head salary? The employer, right? To deduct an income tax on the amount payable. Manner of deduction of tax. Such income tax has to be calculated at average rate. Now I'll explain how to calculate average rate. I have already explained the same. On the basis of rate in force. Rate in force means as prescribed by the Finance Act for the relevant financial year. Mr. Anil, we will discuss why who is required to file return of income later on, because the employer will not know your entire other income also. Say for example, you are receiving rental income. Say for example, you are receiving interest income. So employer does not have this information, and we will discuss in the chapter of return filing who is required to file return of income compulsory. See, Krishna, the calculation is like this. On 10 lakh rupees of income, the tax liability comes to 1,12,500. It is the income is for the year. So tax liability is also for the financial year, for the previous year. So what is your monthly tax liability? That is 9375. 1,12,500 divided by 12 months. Clear? Krishna? So such income tax has to be calculated at the average rate of income tax computed on the basis of rate in force for the relevant financial year in which the payment is made on the estimated total income of assessee. Yes, Sudhanshu. The TDS is required to be deducted in case of government employees also. Therefore, the liability to deduct tax at source in case of salary arise only at the time of payment that I have written here. When TDS is required to be deducted at the time of payment. However, in case an employee intend to opt for concessional rate under section 115 BAC, Sushil, at the end, say for example, the income is only 10 lakh rupees, then the additional tax is not required to be paid because entire tax is deducted from your salary and already deposited to the government. On payment basis, Darshan, the TDS is required to be deducted on payment basis only. When you are making payment of salary, you have to deduct TDS. So say for example, if you are opting for section 115 BAC, that is new regime, then you have to intimate your employee that I am opting for new regime, that so your employer will not take the benefit of deduction and deduct the TDS accordingly. Say for example, an employer is not informed to the employee is not informed to the employer that I am opting for a new regime, then the employer will deduct TDS as per old regime only. Okay. Average rate of income tax I have already explained. Now, in case of non-monetary perquisites also, the TDS is required to be deducted at average rate only. The same method that we are applied for calculation of tax on salary. Okay. Now, in case of an eligible startup, everyone knows about ESOP or sweat equity? Yes or no? Everyone knows about ESOP or sweat equity? Yes or no? Yes or no, everyone? So in case of sweat equity, employer will issue share to their employees at concessional rate as compared to market price. Say for example, the market value of share is 100 rupees and your employer will offer share to employees at 60 rupees. Okay, so it is concessional rate. So 40 rupees is your perquisite, right? 40 rupees is your perquisite in chargeable to tax under the head salary, right? But in case of, and the employer will require add this perquisite to your salary income and calculate the tax liability after considering this perquisite. But in case of eligible startup, an employer being an eligible startup, responsible for paying any income to the assessee by way of perquisite being a specified security or sweat equity share allotted or transferred free of cost or at concessional rate to the assessee. Generally, other than an eligible startup, if you are receiving any sweat equity during financial year 22-23, that is previous year 22-23, then the taxable portion of this perquisite is considered in your salary income of previous year 22-23 and tax is required to be deducted on your perquisite also. But in case of eligible startup, the employer is required to be deducted TDS on this perquisite, that is the 40 rupees per share within 14 days from the earliest of the following. Then that means point number 1, point number 2, and point number 3, whichever is earlier. Within 14 days from the earlier of this 3, the employer is required to deduct tax and deposit the same to the government. So after expiry of 48 months from the end of relevant assessment year. Say for example, the sweat equity shares are issued in assessment year 23-24. So after completion of 48 months from 31st March 24. From the date on sale of such specified security or sweat equity share by the assessee. That means, say for example, the date on which the employee sold such share to someone else, or from the date of assessee ceasing to be the employer who allotted such share. Say for example, the date on which the employee left the job. Okay, so whichever is earlier. Say for example, the 48 months completed on 31st March 28, right? And say for example, the employee sold this share on 31/3/25. An employee left the job on 31/3/26. So which date is earlier? The earlier date is 31st March 25. So within 14 days, that means 14th April 25. Up to 14th April 25, the employer is required to deduct tax on the perquisite on sweat equity. Okay, and it is applicable only and only. It is applicable only and only in case of eligible startup. Other than eligible startup, the employer is required to deduct tax on that perquisite in the year in which the shares are allotted. Okay, everyone clear with this? Yes or no? Answer quickly, everyone. If you have any doubt up till now, just let me know. Shall we move forward? Yes or no? Okay. So now, in this point, it is explained that if you are employed under more than one employer, say for example, Mr. X is working with ABC Limited and PQR Limited. Okay. Then Mr. X is required to inform ABC Limited that he is working with PQR Limited. Just a minute, there is some technical error. So say for example, Mr. X is working with PQR Limited and XYZ Limited. Then Mr. X is required to inform he is working with two employers. So that PQR Limited, while calculating the tax liability of salary income, will consider the salary of ABC Limited also, so that there is no short deduction of tax. Is that clear, everyone? Yes or no? Everyone, yes or no? Say for example, my salary is 5 lakh from PQR Limited and 7 lakh from ABC Limited. Okay, so my total salary income is 13 lakh. Say for example, I will not inform the PQR Limited that I am working with ABC Limited and not ABC Limited to that I am working with PQR Limited. Okay, so what will happen? PQR Limited will consider the basic exemption of 2,50,000 rupees. Same, the ABC Limited is also considered the exemption of 2,50,000, right? So there is a short deduction of TDS. Why? Because 2,50,000 exemption is applicable from my entire 13 lakh salary. But my employer will not know that I'm working with two employers. That's why there is a lower deduction of tax, and at the end, I'm required to pay additional tax while filing the return of income. And there is an interest liability will occur when I will pay the tax. We will discuss the interest on short deduction of tax in later part. Okay, so what is your duty? If you are working with more than one employer, then you are required to inform your first employer as well as second employer that you are working with two employers. Now, say for example, both are responsible to deduct TDS, Miss Varsha. Both employers are required to deduct TDS. Now, say for example, I'm working with ABC Private Limited for 3 months and remaining 9 months I'm working with PQR Limited. Okay, so I have to inform PQR Limited about my previous employer so that he will consider the salary I received from the previous employer and the tax deducted by the previous employer as well. Is that clear, everyone? So your duty is to inform your employer about your employment with another employer. Is that clear, everyone? Yes or no? Just a minute, there is some technical error. I'm not able to share. Just give me 1 minute, everyone. Okay, done. Sure. Now, in respect of a salary payment to employee of government or to employee of companies, cooperative society, local authorities, university, institution, association or bodies, deduction of tax at source should be made after allowing relief under 89(1). Okay, so there is an arrears of relief. So if there is an relief, you are required to consider the same. Now, say for example, if you are having a salary income as well as interest income, and you want your entire tax should be deducted from your salary. So at the year end, while you are filing return of income, you should not require to pay any additional tax. So what you require to do, you have to inform your employer that apart from salary, my other income is like this. Say for example, my salary is 10 lakh and my interest is 50,000. Same way, say for example, I am paying LIC, life insurance premium. I am depositing amount to the public provident fund account. So this I am taking mediclaim. Okay, so this are the eligible deduction under section 80C and 80D. Now, how my employer will know about the deduction I want to claim from my salary income? Okay, so for that purpose, I have to inform my employer that I am paying that amount of LIC, that amount of PPF. I'm paying interest of that much for housing loan, right? Because the loss from house property is also set off against the salary income. So I have to inform my employer about all those deductions and everything, so that my employer will consider the same. Say, for example, my salary income is 10 lakh. But I'm depositing 1,50,000 to Public Provident Fund account. So ATC is 1,50,000, and I'm paying housing loan for rupees and the interest on housing loan 1 lakh. So 24 deduction 1 lakh. So what is my taxable income? 7,50,000. So the employer will require to deduct TDS on 7,50,000 only, but I have to inform about this deduction to the employer. Otherwise, the employer will deduct TDS on 10 lakh rupees. After that, say for example, the employer deducted TDS on 10 lakh. So I have to file my return of income. After completion of year, I will file my return. I will claim the refund, and the government will give the refund after year. Okay, but if I inform my employer that my taxable salary is 7,50,000 only, then there is not the monetary flow will not get blocked. Is that clear, everyone? So you should inform your employer about the deduction you want to claim. And also, you have to give your evidence of this deduction to your employer by the year end. Based on your information, the employer will not consider the same. You have to provide the evidence. Otherwise, anyone says that like, I am giving this donation, I am taking this benefit and etc. But it is duty of employer to check the evidence and duty of employee to provide the evidence. Clear, everyone? Whatever you will get the benefit or perquisite, the employer will provide the details of that perquisite in form number 12BA, that your HRA is this much, your rent-free accommodation is this much. The details of perquisite will be provided in form number 12BA. If your salary is less than 1,50,000, then the details of perquisite is provided in form number 16. The CBDT, that is Central Board of Direct Tax, will provide the guideline or instruction whenever required for deduction of tax under the head salary. Now, this point I have already explained. Requirement to obtain evidence, proof, particulars of claim from employee by the employer. So it is the duty of employer to obtain data of deduction from the employee. If you receive salary arrears, then the 89 relief is covered under the salary chapter. Kindly refer that. You will get the detailed idea. So everyone clear with section 192? Yes or no? Shall we move forward to 192A? Everyone, yes or no? Answer quickly, everyone. Yes or no? Form number 16 is given by employer to employee, that is your the detail that your salary income is this much, your TDS is this much, so that employee will get to know about the amount of tax deducted by employer. Clear? Clear, Darshan? Okay. Next is section 192A. that is premature withdrawal from employee provident fund. So you have already studied what is the employee provident fund, recognized provident fund, unrecognized provident fund, statutory provident fund, right? So whenever you contribute to the employee provident fund, you will get the deduction under section 80C, right? Now, if you are withdrawing from your provident fund account before completion of 5 years of service, before completion of your 5 years of service, your provident fund, employee provident fund account is just like saving account. Every month you are contributing something to that account. Okay. So before completion of 5 years of your see, you have to inform about the deduction to employer at the starting of the year, that is in the month of April itself. And you are required to provide the evidence in the month of coming March. Yes, yes. See, this section is applicable to government as well as non-government employees. There is no bifurcation given in the section. Clear? What? I didn't get your point, Krishna. 12. See, you're required to inform in the month of April about the deduction you want to claim from your salary income to the employee, and up to the month of next March, you are required to submit the evidence. Say, for example, if you fail to submit the evidence, then the balance, your employer will calculate your revised tax in the month of April and deduct the shortfall of taxes from your income, your salary of March month. Clear? Now EPF. So if you are withdrawing from EPF, that is Employee Provident Fund, before completion of, there is section 12 here. There is no section 12. Before completion of 5 years of your employment, you are withdrawing any amount from Employee Provident Fund, then it is to be treated as contribution to unrecognized provident fund, and your revised tax liability will be calculated, and the trustees of provident fund is required to deduct tax at source under section 192A. Say, for example, if you are withdrawing amount from your employee provident fund after completion of 5 years, then nothing is taxable. Your entire withdrawal is exempt. But if you are withdrawing before completion of 5 years, then the withdrawal amount is taxable under the head salary, and trustees of the provident fund is required to deduct tax under section 192A. Now there are some exceptions are given for withdrawal before completion of 5 years. Say, for example, if you are having ill health, that is now you are not able to work anymore. Discontinuance of business. In the company in which you are working, the company itself is closed down. Okay. Cessation of employee. Say, for example, I'm working with ABC Private Limited for 3 years. Now I want to change my job and I will work with PQR Limited. So in that case, what I have to do, I have to inform the EPF that I'm working with new employer and I want to transfer my balance of existing EPF to new employer. Okay, then it is considered not to be considered as withdrawal, because I am just transferring my existing EPF to new employer only. Clear? So if you are withdrawing any amount from your employee provident fund account, then the trustees of provident fund is required to be deducted tax at the rate of 10% at the time of payment. Okay, so section 192A. Section 192A is required. Write down everyone. Section heading though section 192A. TDS on premature withdrawal. Section 192A, TDS on premature withdrawal. Rate of TDS. Rate of TDS 10%. Rate of TDS 10%. Time of deduction of tax at the time of payment. TDS is required to be deducted at the time of payment. TDS is required to be deducted at the time of payment. Non-applicability of section. When the amount of payment is less than 50,000. Non-applicability of section when the amount of payment is less than 50,000. Everyone clear with this? Yes or no? Everyone clear with this? Yes or no? Krishna, in Form 12BA, the employer will give details about the perquisite given by the employer and the tax is required to be deducted on the same. Form 12BA is for perquisite detail. Say, for example, the employer will provide the HRA. For example, he is providing car allowance. Say, for example, he is providing any other allowance. Then the detail is given in form number 12BA, the list of perquisite provided to the employees. Clear, Krishna? Yes or no? Now my screen is visible, yes or no? I think it is visible now. Next is section 193. See here, one point is left, that is deduction at maximum marginal rate. Now, what is maximum marginal rate? So, maximum marginal rate is, yes. So, that's so it is for employee provident fund only, na, beta? Because unrecognized provident fund contribution is in any way it is taxable. Now, what is maximum marginal rate? So, maximum marginal rate is 30% plus 37% surcharge plus 4%. So, if the payee is not provided his or her PAN to the trustees of employee, then the trustees of employee will deduct, trustees of provident fund will deduct tax at maximum marginal rate. So, you have to provide your PAN to the trustees of provident fund. Chalo, next is section 193, that is interest on securities. Now the heading is interest on securities only. I haven't written any summary. No, you should not decide who will deduct TDS. Every employer is required to deduct TDS. If you are working with 2 employees, if you are working with 5 employees, whatever it is. Clear, Sarun? It is not you who is decided the deduction of tax. The employer is required to deduct tax. That's it. Is that clear? Yes or no? Everyone? Shall we move forward to section 193? Yes or no? If you have any doubt in 192 or 192B, then please let me know. Everyone, please let me know fast, so that we'll move forward to section 193, that is interest on securities. Okay. Section 193 is applicable in case of interest on securities. Now, what is securities? Bond, debenture, etc. Right? So, if anyone is paying interest on securities to you, that is company, then the payer is required to deduct tax at the rate of 10%. Then the additional tax is required to be paid by you while filing the return of income, Mohammed. Sushil, maximum marginal rate means maximum tax rate, that is 30% slab rate wala plus 37% surcharge plus 4% cess. That comes to maximum marginal rate. Then there is no required to deduct TDS, Varsha. If my income is below taxable, then TDS is not required to be deducted. Clear? See, if you are having any doubt, please let me know, because while I'm discussing section 192, I won't be able to explain section 192 again. There is no limit in case of salary. If your salary income is taxable, then the employer is required to deduct tax at source. That's it. In subsequent section, there are the limits are given that if the, say for example, interest is more than 50,000, more than 40,000, then TDS is required to be deducted. But in case of salary, in case of section 193, there is no threshold. In case of section 193, if who is the payer who is required to pay interest on securities? Okay, the rate of TDS is 10%. Now here the important word is given is that resident assessee. So say for example, a company is paying interest on securities to non-resident, then this section is not applicable. Okay. So here the payee should be resident only. Rate of tax 10%. There is no threshold. Okay. Now the important is when TDS is required to be deducted. So at the time of payment or credit, whichever is earlier. Now what is, see, everyone knows at the time of payment. So while you are making payment, you are required to deduct TDS. But what is the meaning of at the time of credit? See, now onwards, the TDS in majority section, the TDS is required to be deducted at the time of payment or at the time of credit, whichever is earlier. Mohammed, I have already explained that if your income is not taxable, if it is below taxable, then TDS is not required to be deducted in case of salary. Now, what everyone knows what is the time of payment, right? But what is the time of credit? So credit in the books of account. So when you are passing entry in your books of account, that is the time of credit. So when you are required to deduct TDS at the time of payment or at the time of entry in your books of account. Say for example, the interest is liable due to be paid on 5th of April. Okay, so I will pass the journal entry in my books of account on 5th of April. Say for example, I will make the payment on 7th April. So the payment is on 7th April, credit in the books is 5th April. So when TDS is required to be deducted on 5th April. Okay, so in section 193, TDS is required to be deducted at the time of payment or credit, whichever is earlier. Is that clear, everyone? Yes or no? Everyone clear? What is the meaning of credit? Credit means in the books of account, whatever the account you will credit. Say for example, if you are crediting the person's name account or suspense account or interest payable account, whatever is the name. Is that clear, everyone? Yes or no? Everyone clear what is credit in the books of accounts? So in case of section 193, TDS is required to be deducted at the time of payment or at the time of credit, whichever is earlier. Now, non-applicability of TDS under section 192. So following are the list given. Following are the list given on which on the same, the TDS is not required to be deducted. Say for example, on national development bond, it is the name of bond. So if the interest is required to be paid on national development bond, then the payer is not required to deduct TDS. Same 7-year national savings certificate. So these are the name of bonds given on which you are not required to deduct TDS. On any debenture issued by company in which public are substantially interested to resident individual or HUF. Say for example, Reliance Limited is a listed company. So Reliance Limited is required to pay interest on debenture to an individual or HUF, and the amount of interest is paid by way of account pay check, and the amount of interest is less than 5,000. See here the condition is payer is listed company, payee recipient is individual or HUF. Third, mode of payment, account pay check. Fourth, amount of interest less than or equal to 5,000. Then the payer is not required to be deducted tax. But say for example, the amount of interest is more than 5,000. Say for example, it is 6,000. Then the Reliance is required to deduct tax at the rate of 10% at the time of payment or credit, whichever is earlier. Clear, everyone? So these are the list given that on what kind of bond the TDS is not required to be deducted. So you just have to read once. Clear, everyone? Yes or no? Section 193 clear? Shall we move forward to section 194? Yes or no? Everyone answer quickly, please. Yes, Mohammed, if the TDS is deducted more than your actual liability, then the balance will be refunded to you while you file your return of income. Clear, everyone? Chalo. Now section 194, TDS on dividend. Now here, who is the payer? So who is required to pay dividend? The company. Yes or no? Individual to individual dividend नहीं pay कर सकते, right? Yes or no? So who will pay dividend? Domestic company or the foreign company, right? But this section is applicable only and only if the payer is domestic company. Write down this summary, everyone. If the payer is domestic company and the payee, yani recipient of dividend is resident shareholder. Recipient of dividend should be resident shareholder. If the shareholder is non-resident, then this section is not applicable. The rate of TDS is 10%. So the company is required to deduct tax at the rate of 10%. Say for example, Reliance Limited is paying dividend of rupees 10,000 to me. Then, by making payment, before making payment, the Reliance Limited time of deduction is before making payment. The Reliance will deduct tax at the rate of 10%. So the Reliance will deduct tax 1,000 rupees and Reliance will deposit 9,000 to my bank account and 1,000 to government on my behalf. Okay. The threshold limit, that is when TDS under section 194 is not applicable if the dividend amount is less than 5,000. If the dividend amount is less than 5,000 and the mode of payment of dividend is other than cash. So say for example, give me the answer. Say for example, my dividend is 3,000 and Reliance is paying dividend by way of cash. So is Reliance is required to deduct tax? Yes or no? Everyone. Reliance is paying 3,000 dividend to me in cash. then will Reliance is required to deduct TDS on 3,000 rupees dividend? Yes or no? Everyone, yes or no? Everyone got my question? Reliance is paying 3,000 dividend to me. See, my dear friend, this threshold limit is in total. Whatever you will get the total dividend, not per share dividend. Yes. So in my case, the Reliance should require to deduct tax. Why? Because the mode of payment is in cash. Say, for example, if the mode of payment is through banking channel, then Reliance is not required to deduct TDS. Why? Because the amount of dividend is less than 5,000 and the mode is other than cash. Clear? जिनका आंसर नो था उनका क्लियर हुआ? Everyone? Yes or no? So in even if the dividend is less than 5,000, but the mode of payment is in cash, that's why the Reliance is required to deduct TDS. And you have to check the entire dividend received from one company, not per share dividend. Is that clear, everyone? Yes or no? It is paid in cash. That's why TDS is required to be deducted, Mr. Sushil. Is that clear? Yes or no? Now here the dividend covered deemed dividend also. Deemed dividend you have already studied in income from other sources, that is section 222A, B, C, D, E. TDS is not required to be deducted if dividend is paid to LIC, life insurance company, general insurance company, or any other subsidiary of that company. Everyone clear with section 194? Yes or no? Just go through once. I'll give you 1 minute. Just if you have any doubt, please let me know. After that, we will start with section 194A. Everyone clear? Yes or no? Everyone clear up till now? See, this chapter is important, huh? You will get cash marks from this chapter. You just need to remember the rate, the threshold limit, and the section number. And you will get cash marks. Darshan, the threshold limit is not per share, it is in total. It is company-wise total. Total dividend, not per share. Nowhere it is written, it is per share. The words they have written is 5,000 rupees dividend. So obviously it is in total. Clear? If dividend amount does not exceed 5,000 and the mode of payment is other than cash, then TDS is not required to be deducted. Clear, Sushil? If the life insurance, see, it is not necessary that the shareholder should be an individual, right? So if your shareholder is life insurance company, if life insurance company is holding shares of Reliance Limited, then Reliance Limited will pay dividend to the life insurance company. Then when the dividend is paid to life insurance company, then TDS is not required to be deducted irrespective of amount. Okay, chalo. Next is section 194A. That is interest other than interest on securities. So we have studied the TDS on interest on security in section 193. Right? Now, what is interest other than interest on security? That is interest on loan, interest on fixed deposit, interest on recurring deposit. Yes or no, everyone? So, to all those interest, the TDS is required to be deducted under section 194A. So 194A is applicable on interest on loan, interest on normal deposit, time deposit, recurring deposit, clear? Here, the rate of TDS is 10%. Time of deduction, again, at the time of payment or at the time of credit, whichever is earlier. Here, the threshold, friend, the threshold is in total from bank wise. From bank wise. If interest is on FD or other deposit, if interest is on FD, yani fixed deposit, then the threshold is 40,000. Okay, fixed deposit with cooperative society, fixed deposit with bank, fixed deposit was with any banking company. Then the threshold is 40,000. Say for example, Kotak is paying 45,000 interest on fixed deposit to me. Then it is more than 40. Yes, then Kotak is required to deduct tax. So this 40,000 limit is for the year bank wise, because the bank will not know what amount I will get from another bank. Say for example, I have 3 deposits, one with Kotak, one with ICICI and one with Bank of Baroda. So the 40,000 limit is from bank wise, right? So 40,000 is for Kotak, 40,000 is for BOB and 40,000 is for ICICI, not in aggregate. This limit is 50,000. It is interest amount, right? If the payee is senior citizen. If the payee is senior citizen. So if you are a senior citizen and you are receiving interest up to 50,000 from on your fixed deposit from bank, then the bank is not required to deduct TDS. Other than fixed deposit, that means other interest, just like say for example, fixed deposit, recurring deposit, any kind of deposit. I'm just explaining, taking the example of fixed deposit for better understanding. Say for example, XYZ partnership firm is taking loan from ABC partnership firm. Then XYZ partnership firm is required to pay interest on loan to ABC partnership firm, right? So the loan is other than fixed deposit. So in that case, the threshold limit is 5,000. So if for the year the interest is more than 5,000, then XYZ partnership firm is required to deduct tax at the rate of 10% on entire amount. See, my dear friend, once the threshold exceeds, the TDS is required to be deducted on entire amount. Say for example, if I am receiving interest of 45,000 rupees on fixed deposit from bank, then it is more than 40. Yes, the bank is required to deduct TDS on entire 45,000, not the exceeding 40,000. Okay, once the threshold exceeds, the TDS is required to be deducted on entire amount. Is that clear, everyone? Yes or no? Up till now, clear? If payer is an individual or HUF, then if payer is an individual or HUF and in last financial year, say if you are paying interest in financial year, I have taken loan of rupees, say for example, I have taken loan from Mr. X. So I require to pay interest to Mr. X. Yes, I being an individual is required to pay interest on loan. So my threshold is 5,000. Say for example, in financial year 22-23, I have to pay 15,000 interest to X, Mr. X, right? So in that case, threshold is 5,000. Yes or no? Yes. I am an individual. Yes or no? Yes. So up to the time आपने जो भी पढ़ा, you have to deduct TDS because the interest is more than 15,000. But there is one exception is given. If payer is an individual or HUF, so I am an individual. Yes. In last financial year, that is, I'm making payment of interest in current financial year. So I have to check in last financial year, that is in financial year 21-22, if in case of business, if I am doing a business and my turnover is greater than 1 crore, if my turnover is greater than 1 crore, then only in current year I have to deduct TDS. If in case of profession, my professional receipt is greater than 50 lakhs, then only I have to deduct TDS on payment made to Mr. X. But this is applicable only in case of if payer is individual or HUF. So what you have to check, if the payer of interest is individual or HUF, then in previous financial year, if he is doing business and turnover is more than 1 crore, then only TDS under section 194A is required to be deducted. Say for example, I am salaried employee in last year. In current year, I have to pay interest of 15,000 to Mr. X on loan. So do I need to deduct TDS? No. Why? Because in last year, I don't have any business income. So there is zero turnover. Say for example, in last year, I am running a business and my turnover is 70 lakh rupees. It is less than 1 crore. Yes. So in current year, I being an individual is not required to deduct tax on interest on loan. Is that clear? But this relaxation is given only and only in case if the payer is an individual or HUF. So if the payer is partnership firm, then this condition is not applicable. If partnership firm is required to pay interest to anyone and the interest is more than 5,000, then partnership firm is required to deduct TDS. That's it. Okay, this relaxation is given only and only in case if the payer is an individual or HUF. Is that clear, everyone? Everyone is clear with this point because this point will come in majority section now onwards. So if payer is an individual or HUF and in last financial year, if he is doing business and turnover is less than 1 crore And if he is in profession and professional receipt is more than 50 lakh, then only in current year he or she is required to deduct tax. Otherwise, they are not responsible for deduction of tax. Is that clear, everyone? Yes or no? Everyone, yes or no? Please answer fast. Yes or no? Please answer fast, everyone. Please write down this summary. Interest payment, now my dear friend, who is required to deduct TDS? Payer, not the recipient. The deduction of tax is responsibility of payer only. So if you have to pay interest on loan, then you are required to deduct tax and then this relaxation is applicable. If you are receiving interest, then it is not your responsibility to deduct tax. Clear, Mohammed? Yes or no? Everyone, please answer fast. Shall we move forward? More than 1 crore, Sushil. Mohammed, Mr. X is paying interest to Mr. Y. Then it is expense in case of Mr. X and income in case of Mr. Y. So while, say for example, the interest is 10,000, so Mr. X will deduct tax of 1,000 and deposit to the government on account of Mr. Y. Now clear? You are paying interest, you are deducting tax from that interest only. So Mr. Y will receive 9,000 in his bank account. Clear, Mohammed? Please answer fast. So it is income of Mr. Y. And Mr. X is a payer of interest. So Mr. X is required to deduct tax, not Mr. Y. Clear? Sure. So we have discussed in case of other interest, the threshold is 5,000 and 40,000 in case if the payer is banking company, cooperative society or post office. And if you are senior citizen, then the limit is 50,000. This threshold limit you have to check. Yes, profession may exceed 50 lakh. The word is exceed 50 lakh. So exceed 50, no tax is required to be deducted. More than 50, tax is required to be deducted. Now, in which cases TDS is not required to be deducted? So interest paid or credited by firm to any partner, because it is appropriation of profit only, na? Because partners are right. So if you are paying interest to partner, partnership firm is paying interest to partner, then TDS is not required to be deducted. If say for example, the interest is also credited on saving account only, saving account also, right? So on that interest also TDS is not required to be deducted. This point is very important, my dear friend. Interest paid or credited to following entity, then TDS is not required to be deducted. If you are paying interest to banking company, bank, cooperative society, unit trust of India, life insurance corporation, then you should not require to deduct tax. Why? Because that is their main business. Say for example, in which case you are paying interest to bank. Say for example, I am taking housing loan. Do I need to pay interest to the bank? Yes or no? Do I need to pay interest to the bank if I'm taking housing loan from the bank? Do I need to pay interest to the bank? Yes or no? You have to read this list once. I'll ask question tomorrow from this list on which payment TDS is not required to be deducted. Everyone, give me an answer. I am taking housing loan from bank. Do I need to pay interest to the bank? Yes or no? Yes or no? I am taking housing loan from the bank. Do I need to pay interest to the bank? I'm just asking about the interest payment, not about the TDS. Yes or no? Yes. Right? So in that case, do I need to deduct TDS? No. Say for example, Reliance is taking loan from the bank. Do Reliance need to deduct TDS on interest payment to bank? No. Why? Because in exception, they have given that in case of following entity, if you are paying interest to following entity, then TDS is not required to be deducted. Okay. So if you are paying interest to the bank, say for example, if Reliance is paying interest to bank or any banking company on loan, then Reliance is not required to deduct TDS. Is that clear, everyone? Yes or no? Everyone clear up till now? So we will discuss the illustration number 1. Yes or no? Chalo. Examine the TDS implication under section 194A in cases mentioned here under. On 1/10/22, Mr. Harish made a 6-month fixed deposit of 10 lakh at 9% per annum with ABC Cooperative Bank. The fixed deposit mature on 31st March 23. So my dear friend, here the payer is, see, Mr. Harish made the fixed deposit. So Mr. Harish will get interest, yes or no? Yes. From ABC Cooperative. So payer is ABC Cooperative. And recipient is an individual. So TDS provision is applicable. First thing, yes or no? Yes. Why? Because the payer is ABC company. If payer is individual, then you have to check whether the turnover is more than 1 crore or not, the professional receipt is more than 50 lakh or not, whether the payment is made to banking company or not. But here in this case, the payer is ABC company, and the recipient is individual, that is Mr. Harish. So first, what is the interest Mr. Harish will get? 10 lakh fixed deposit, rate of interest 9%, and he will get interest for 6 months from 1st October to 31st March. Yes or no? So here the interest comes to 45,000. ABC Cooperative Bank is required to pay interest of 45,000 to Mr. Harish on his fixed deposit. Now, give me an answer whether ABC Cooperative Bank is required to deduct TDS under section 194A. Yes or no? And if yes, then what is the amount of TDS? Yes, ABC Cooperative Bank is a banking company, is required to deduct TDS because the interest is more than 40,000. Because the interest is more than 40,000, the rate of TDS is 10%. So the TDS is 4,500. So ABC Cooperative is required to deduct TDS at 4,500. Clear, everyone? Second question. On 1/6/22, Mr. Ganesh made 3 9-month fixed deposit of 3 lakh each. So उसने 3 lakh की 3 deposit करी, right? Carrying interest at the rate of 9% with Dwarka branch, Janakpuri branch, and Rohini branch of XYZ bank. See here, the 3 different branch, but one bank. A bank which has adopted CBS, that is core banking solution. So if in case of CBS, the head bank is know that what is the interest given from one branch, second branch, third branch to one individual. So you have to check the 40,000 limit to bank wise, not branch wise, right? So here the Ganesh made deposit to the bank. So here is XYZ bank. What is the amount of interest? 3 lakh rupees, 3 deposit into 9% interest into months. How much months? From 1st June to 28th Feb. That is 9 months. Yeah, you can compute total. So what is the amount of interest? It comes to 60,750. It is more than 40,000. Yes. So XYZ bank is required to deduct TDS at the rate of 10%. That is 6075. Clear? Yes or no? Everyone clear with the second point? Yes or no? The third point is important. That's why I'm asking, clear with second point. Now, third question. On 1/10/22, Mr. Rajesh started a 6-month recurring deposit. See, recurring deposit means every month you are deposit 2 lakh rupees, right? Per month at 8% per annum with PQR Bank. The recurring deposit mature on 31st March 22. So, my dear friend, there are 2 methods to calculate interest on recurring deposit. See, on 1/10/22, he made deposit of 2 lakh rupees. So on this deposit, the rate of interest is 8% and the interest is for 6 months. Yes or no? Recurring deposit monthly. So he is depositing 2 lakh every month. So now on November, 1st November, he will deposit 2 lakh. Yes. So on this, he will get interest for 5 months. On December, he will get interest for 4 months. On deposit made on January, he will get interest for 3 months. On February, he will deposit 2 lakh and get interest for 2 months. On March, he will deposit 2 lakh and get interest for 1 month, right? So you have to calculate this, and then total interest. So better is you have studied in 11, 12 standard, 2 lakh recurring deposit, rate of interest into 6 plus 5 plus 4 plus 3 plus 2 plus 1. How much months? 21. Divide by 12. So you will get answer 28,000. Here also you will get total answer 28,000. So here the interest is less than 40,000. No TDS is required to be deducted. Clear everyone? Yes or no? So here is two method for calculation of interest on recurring deposit. Clear everyone? Yes or no? Yes or no everyone? Okay. So write down this. We will have a break of 5 minutes. After that, we will discuss the next provision. If you are having any doubt, just let me know. Okay. Mr. Manish, we are on break. See, Mr. Anil, the recurring deposit means you are depositing 2 lakh every month with the same bank only, my dear friend. So here the threshold limit does not vary. The total interest you will get is 28,000 on your recurring deposit. So the interest, total interest is less than 40,000. Then that's why TDS is not required to be deducted. Clear? Yes or no, Mr. Anil? You have to check the amount of interest, not the amount of deposit. Clear? Chalo, next is section 194B and 194BB. Both sections are same. The threshold, the rate of tax, everything is same. So the heading is winning from lottery, crossword puzzle and horse races. These are casual income. This you have already started in income from other sources, right? And the casual income is taxable at the rate of 30%. No basic exemption is available, right? And no expenses are allowable. No set-off is permissible against casual income. Yes or no? In case of minor also, bank will deduct TDS on his parents' PAN. If parents is not there, then legal guardian. If legal guardian is not there, then TDS is required to be deducted in minor's PAN only. Okay, Sudhanshu. So if you have any winning from lottery or crossword puzzle, then section 194B is applicable. And if you are winning from horse race, then section 194BB is applicable. Here, the TDS is required to be deducted at the time of payment. Why? Because they don't know who will be the winner. The rate of TDS is 30%. The threshold limit is 10,000. So if you are winning any lottery and the amount of lottery is, say, for example, 1 lakh rupees. It is more than 10,000? Yes. Then the payer of lottery will deduct TDS at the rate of 30%. So he will deduct 30,000 as TDS and that 30,000 is deposit on your behalf to the government. Clear? Now, if the winning is partly in cash or partly in kind and the cash is not sufficient for the TDS, say for example, you win the lottery of 5 lakh rupees plus 15 lakh car. So your total winning value is 20 lakh rupees. So 30% TDS on 20 lakh rupees comes to 6 lakh, right? But the cash price is only 5 lakh. So the payer will deduct TDS of 5 lakh and there is a shortfall of 1 lakh rupees. So the payer will make sure that he will collect TDS or he will ensure that tax on entire lottery is deducted and deposited to the government. So practically what happened, they will let you know that your winning price is this much, kindly pay the TDS amount and get your car. Okay, so it is responsibility of payer before releasing the lottery item that the tax is properly deducted. Same provision is applicable in case of horse race. The threshold is 10,000, the TDS is 30%. Is that clear, everyone? Yes or no? See, 194B and 194BB is very simple. It is applicable to casual income, rate of TDS 30%. TDS is required to be deducted at the time of payment, and the threshold is 10,000. Is that clear, everyone? Yes or no? Up till now, everyone clear? I'm writing the new provision. Till time, if you have any doubt, just let me know. After that, we will discuss section 194C, that is payment to contractor. Now section 194C. 194C heading says that TDS on contract on payment made to contractor or and subcontractor. So here the contractor means not only the contract of building, every contract. Say for example, in our office, we are giving contract for annual maintenance of computers, electricals. In MNCs, there's a contract of canteen, right? So every kind of contract is covered. So if you are making payment of any contract, then you are required to deduct TDS under section 194C. Here also, if the payer is an individual or HUF, say for example, as an individual, I am giving contract for computers. Credit in the books of account, Bhumika, I have already explained that. What is the meaning of credit? Credit in the books of account, not in the bank. Entry in the books of account. So if, say for example, I'm an individual and I'm making payment of contract for my computers, right? And in last year, my professional receipt is less than 50 lakh rupees. Then in current year, this provision is not applicable to me. So here also the relaxation is given to those individual and HUF whose turnover in last financial year is less than 1 crore. And if they are in profession, their receipts are less than 50 lakh rupees. Then this provision is not applicable to them. But say for example, being an individual, in last year, my professional receipts are more than 50 lakh. Then in current year, if I'm making any payment for contract, then I need to deduct TDS. Is that clear, everyone? Yes or no? Now the TDS is required to be deducted at the time of payment or credit, whichever is earlier. Payment means actual payment and credit means credit in the books of account, that the accounting and the date on which you pass the accounting entry in your books of account. Threshold is single bill is less than 30,000. If my single bill is less than 30,000, then TDS is not required to be deducted. So if single bill is greater than 30,000, then TDS is applicable. Now, say for example, my single bill is less than 30,000, but my aggregate bill is greater than 1 lakh rupees. Say for example, I am receiving 6 bill of 20,000 for my computer maintenance contract. So the total bill value is 1,20,000 for the year. Yes or no? Yes. It is more than 1 lakh. Yes. Then I need to deduct TDS. Okay. So if my single bill is less than 30,000, no TDS is required to be deducted. But if my aggregate value of bill, if my total of all the bill for the year is more than 1 lakh, then also TDS is required to be deducted, even if the single bill value is less than 30,000. Now, what is the rate of TDS? So 1% if the pay is individual or HUF. So my contractor is an individual or HUF, then TDS is required to be deducted at the rate of 1%. If my pay is other than individual HUF, that say for example, the Reliance is given the contract for annual maintenance of computer to PQ or partnership firm, then Reliance is required to deduct TDS at the rate of 2%. Clear? So if pay is individual HUF, then the rate of TDS is 1%. If the pay is other than individual and HUF, then the rate of TDS is 2%. Now, my dear friend, say for example, I have received 3 bill of 20,000. So my single bill is less than 30,000. And up till now, my total bill value is also 60. That is less than 1 lakh rupees. So no need to deduct TDS. Now, say for example, I receive 4th bill and the value of 4th bill is 50,000. So now the aggregate is 1,10,000. It is greater than 1 lakh. Yes. Now I require to deduct TDS on 1,10,000. Say for example, the rate of TDS is 1%. So I need to deduct 1,100 TDS from my last bill. So once your aggregate limit exceeds 1 lakh, then you need to deduct TDS on entire amount from your last bill or the bill in which the threshold exceeds 1 lakh rupees. Is that clear, everyone? Yes or no? Is that clear? Shall we discuss to illustration number 2? Yes or no? Yes or no? Please let me know. Chalo. ABC Limited make the following payment to Mr. X. Now the payer is ABC Limited. So if threshold exceeds, TDS is required to be deducted. No relaxation is given to company. Now the payee, recipient कौन है? Mr. X, individual. So if TDS is applicable, see this calculation is here only. We'll discuss illustration number 2 and I'll explain again. So here the payee is individual. So if the TDS is applicable, then what will be the rate of TDS? 1%. Yes or no? Everyone? See the calculation which I have explained here is covered here. In your illustration number 2, I'll explain that calculation again. Okay? So don't worry. So everyone clear here, the payer is ABC Limited and the payee recipient is Mr. X. Mr. X is an individual. So if the TDS is applicable, then the rate will be 1%. That is clear, everyone? Yes or no? Okay. For contract work during previous year 22-23. So first make the payment of 20,000 on 1st May 22. Chalo. On 1st May 22, my bill value is less than 30,000 and aggregate is also less than 1 lakh. So on first bill, no TDS. Yes or no? Now second, I will receive second bill of on 1st August 22 and make the payment of 25,000. So here also my single bill is less than 30,000, that is 25, and my aggregate is less than 1 lakh. In दोनों का aggregate is 45,000. Less than 1 lakh. So on second bill also no TDS. Now I received the third bill on 1st December 22 and the value of bill is 28,000. Here also the single bill is less than 30. Yes or no? Single bill is less than 30. Aggregate is also less than 1 lakh. Yes or no? Aggregate is also less than 1 lakh. Aggregate कितना होता है? 20, 25 and 28. $73,000. Right? So it is less than 1 lakh. So on third bill also there is no TDS. Chalo, up till now clear, up to 3 bill there is no TDS liability incurred because my single bill is less than 30,000 and my aggregate is less than 1 lakh. Is that clear, everyone? Yes or no? Now I receive the fourth bill and the value of bill is 30,000. It is not exceeding 30, right? But If I add 30, then my total is greater than 1 lakhs. Yes or no? Yes or no? Yes. So my aggregate is exceeding 1 lakh rupees. Now I need to deduct TDS on entire 1 lakh 3,000 at the rate of 1%, that is 1030 TDS from my last bill. Because earlier 3 bills we have already made the payments, right? So we will deduct the entire TDS of 1030 from last bill. Is that clear, everyone? Yes or no? Clear, everyone? Up till now, clear? Yes or no? Sushil Kumar, clear illustration 2, yes or no? If you have any doubt, just let me know. Now the definition of work. Work includes everything: advertising, broadcasting, telecasting, carriage of goods, catering. This point is applicable, important. Manufacturing or supplying a product according to the requirement or specification of customer by using material purchased from such customer or its associates. Say for example, McDonald's, McD. If you buy anything from McD, you will get the bag on which the logo of McD is put. So if McD is given contract to someone for preparing for making that bag of McD with the logo of McD, and that manufacturer of bag will purchase the raw material for the production of bag from McD, then this will considered as contract. But say for example, if that person who are manufacturing bag is purchased the raw material from someone else, from third party, then that is not treated as contract and section 194 C is not applicable. Is that clear? Yes, Sushil. Is that clear, everyone? This point is clear? Yes or no? So in case of, if you are giving order for manufacturing as per your requirement and the raw material is purchased from you, then only it is treated as contract. Otherwise, it is treated as sale of goods and not a contract. Okay. Chalo, non-applicability of TDS. If you are giving contract for goods carriage, that is to transport agency for transport of goods, and the transport agency owns less than 10 goods, less than 10 heavy vehicles. Okay, that is 44A, and he is giving declaration along with his pen, then TDS is not required to be deducted. Clear? Now the contract also includes supply of manpower also, but rendering professional services like lawyer, physician, surgeon, engineering, accountant, they are treated as professional services and not as a contract. Say for example, if a company is giving contract for their audit to you, then it is for professional services. It is covered under section 194J and not under section 194C. Deduction of tax at source on payment of gas transportation charges by purchaser of natural gas to the seller. If you are purchasing natural gas and the seller of gas is provided gas directly to your place, then there is a transportation cost. Yes. नॉन एप्लीकेबिलिटी मीन्स सी प्रोफेशनल सर्विसेज के लिए 194J है, सो ऑन प्रोफेशनल सर्विसेज 194C इज नॉट एप्लीकेबल. सिंपल. So if seller of goods provide the transportation of gas, then TDS under section 194C is not applicable because it is the sale of goods. It is contract for sale of natural gas, not for the transport of gas. Okay. Applicability of TDS provision on payment by broadcaster or television channel to production house or production of content or program for telecasting. See, here there is a dispute. If, say, for example, one production house will produce one program and it should be broadcast on some television channel, then whether the TDS under section 194C is applicable or no, or not. So there are two types of payment. First is payment for production of content, and second is payment for broadcasting or telecasting rights. Say, for example, one advertising company is making advertisement, right? So that is the production of content. Second is that ad is published on television channel. That is the purchase of broadcasting or telecasting right. Okay. So on first payment, that is, say for example, I'll explain this entire provision with one example. Say for example, Manyavar is giving advertisement contract to advertising agency. Okay, so advertisement agency will prepare the content of Manyavar, making ad for they have prepared ad for taking Virat Kohli and Anushka Sharma, right? Now, the advertising agency will give broadcasting right of that ad to television channel. So advertisement is covered in the definition of work. So in first type of payment, the TDS under section 194C is applicable. Here, from advertisement agency to broadcasting to television channel, whatever payment is made, no TDS is required to be deducted. Why? Because the advertisement agency has prepared the content and the television channel has to just produce, just to telecast the same on the television channel. They don't need to do anything. So that is not a contract. That is sale of goods. Okay. So here in first type of payment, TDS under 194C is applicable. In second kind of payment, TDS under section 194C is not applicable. My dear friend Muhammad, in illustration number 2, 30,000 bill due. That means you have received the bill and the payment is pending. So when you receive the bill, you have to make entry in the books of account. So in that case, the credit is earlier. So the TDS is required to be deducted on the date on which the invoice is received. That is the due date. Clear? So TDS is required to be deducted. What is the meaning of due? When you receive the invoice, then only it is due. Na? Without invoice, will you make payment? Clear? Everyone clear with this advertising agency? Yes or no? Yes or no? Everyone, please answer fast. Illustration 3 is a theoretical question, the transport operator, that I have already explained. Everyone clear with section 194C? Shall we proceed for next section, that is 194D? Yes or no? Please, if you have any doubt, please let me know. I'll give you 1 minute. Please let me know if you have any doubt. In our books, in payers books of account, my dear friend, you will receive invoice. So you are making entry in your books, na? Why you are checking the entry in someone else's books? It is payers book only. Clear, Mohammed? Yes or no? Credit in the books of account of payer. Clear, everyone? Yes or no? Please answer fast. Shall we move forward to next section, that is section 194D? Yes or no? Please let me know. Please let me know if you are having any doubt, because when we proceed to next section, then you are asking the doubt of previous section. So it is difficult. So next is insurance commission, section 194D. Now who will pay insurance commission? Insurance company. My dear friend, at the time of, say for example, I'm Muhammad, I am giving you a bill of contract, then what will be the entry in your books of account? Contract expense account debit to Mr. X, yes or no? So the pays account is credit in your books of account, not you have to check the payers account, pays account. What is, see, I am giving you bill of rupees 1,10,000. What will be your entry? Contract expense debit 1,10,000 to Ms. Rangoli's account 1,10,000. So you are crediting my account, na? Okay. Sudhanshu, say for example, if you are receiving contract bill of contract for 35,000, then the single bill is more than 30, you need to deduct TDS on that, on entire 35,000. Clear? So so from first bill you need to deduct TDS. Chalo. Now here the payer is insurance company, because the heading is insurance commission. Yes, then subsequent bill TDS. See, first bill is more than 30,000, you need to deduct TDS. Second bill is less than 30,000 and aggregate is less than 1 lakh, then no TDS. Now when the aggregate become more than 1 lakh, you need to deduct TDS on entire amount except that 35,000, because on 35,000 you have already deducted TDS. Payer is insurance company. Paying is agent, because commission is paid by insurance company to the agent, right? The rate of TDS is 5%. Time of deduction of TDS, again, payment or credit, whichever is earlier, and threshold 15,000. Now, the insurance commission will be paid on procuring new policies, for renewal of policy, for continuation of old policies, right? So when insurance company is making payment to an agent, the insurance companies deduct TDS at the rate of 5% if for the year the commission is more than 15,000. The TDS is required to be deducted at the time of payment or credit, whichever is earlier. Clear, everyone? See, you will receive you will study three commission, that is insurance commission, commission on lottery tickets, and general commissions. The provision is same in each and everything, that the rate is 5%, the time of deduction is payment or credit, whichever is earlier, and the threshold is 15,000. The payer and payee will change in subsequent sections. Everyone clear with section 194D? It is very simple. Everyone clear with this? Yes or no? So we'll proceed towards next section. Have you have studied section 80C? Life insurance premium, yes or no? So if policy taken before 1st April 2012 and your premium is less than or equal to 20% of your sum assured. Now what is sum assured? Sum assured means the fixed amount you will get at the maturity of your policy, at the time of maturity of your policy. That is called as sum assured. Okay. And if policy is taken after 1/4/2012, then you have to check whether your premium is more than 10% of sum assured or not. So we are taking example of policy taken after 1st April 2012. Say for example, my sum assured is 50 lakh rupees. My sum assured is 50 lakh and every year my premium is 3 lakh rupees. So you have to check whether the premium is more than 10% of sum assured or not. So my sum assured is 50 lakh and 10% of 50 lakh is 5 lakh. My premium is 3 lakh. It is less than 10% of sum assured? Yes or no? Yes. So the maturity of 50 lakh is exempt. If the maturity is exempt income, then TDS is not applicable because the income itself is exempt. Okay. But say for example, my premium is 6 lakh rupees. Per year, my premium is 6 lakh rupees and 10% of my sum assured is 5 lakh rupees. So my premium is more than 10% of sum assured. Yes, then the maturity of 50 lakh is taxable in my hand. Now, if the maturity is taxable, then section 194DA is applicable. Then TDS is required to be deducted by the LIC who is paying the maturity amount. So the rate of TDS is 5%. Okay, and the TDS is required to be deducted on maturity amount, because at the time of maturity, you will get sum assured plus bonus. So say for example, at the time of maturity, I'll receiving 53 lakh and during the year, I'm paying 40,000 as premium. Okay, then
1 second.
13 lakh is taxable.
Sorry, I'm still not sure about that.
And
sorry, I'm still not sure about.
Then 194 DA is applicable and the LIC company will deduct TDS at the rate of 5% on this 13 lakh rupees. Okay, so the TDS is required to be deducted on maturity amount minus premium paid. Minus premium paid. But TDS is applicable only and only when your maturity is taxable. If your maturity is not taxable, then TDS is not applicable. Clear? The threshold is 1 lakh. Even if your maturity is taxable, but the payment made by the insurance company, is less than 1 lakh, then TDS is not required to be deducted. Okay. So let us discuss illustration number 4 for better understanding. Mr. X resident is due to receive 4.5 lakh on 31st March 23 towards maturity proceed of LIC policy taken on 1/4/2020. So the policy is taken after 1st April 2012. So we need to check the premium is less than 10% of sum assured or more than 10% of sum assured. Now my maturity is 4.5 lakh, but my sum assured is 4 lakh, for which the sum assured is 4 lakh. And annual premium is 1,25,000. Policy taken on 1/4/2020, right? Sum assured 4 lakh. 10% of sum assured 40,000. Premium per year 1,25,000. So my premium is more than 40,000. Yes or no, everyone? Yes. So my maturity is taxable because my premium is more than 10% of sum assured. If maturity is taxable, then section 194 DA is applicable. So 4,50,000, my maturity amount minus premium paid. So I have paid premium for 2021, 21-22 and 22-23. So 1,25,000 for 3 years. So it comes to 3,75,000. My premium paid, that is maturity, that is premium paid. So net is 75,000. So 5% TDS is required to be deducted on 75,000. Here, my dear friend, the maturity is 4,50,000. Okay. So TDS is applicable. If maturity is less than 1 lakh, then TDS is not applicable. Is that clear, everyone? First point clear? Yes or no? Everyone clear? Yes or no? Please answer. Second point. Mr. Y is a resident is due to receive 3.95 lakh on 31st March 23 on policy taken on 31st March 2012. For which sum assured is 3.5 lakh and annual premium is 26,100. Now, here the policy is taken before 1st April 2012, right? So we need to check 20%. So sum assured is 3.5 lakh. What is 20% of 3.5 lakh? Everyone, what is 20% of 3.5 lakh? Please let me know what is 20% of 3.5 lakh. No, Varsha, if policy taken before 2012, then it is not necessary the full amount is exempted. We need to check whether the premium is less than 20% of sum assured or not. We are discussing that only. Here our policy is taken before 1st April 2012. The sum assured is I'll explain first point again, Sushil, after discussing the second point. My sum assured is 3.5 lakh. Everyone, my policy taken on 31st March 2012, that is before 1st April 2012. Now, what is the 20% of 3.5 lakh? 70,000. My premium is 26,100. My premium is 26,100. It is less than 70,000. Yes or no? Yes. So in this case, my premium is less than 20% of sum assured. Therefore, the entire maturity is exempt. If maturity is exempt, then no TDS is required to be deducted. Is that clear, everyone? Second point. I'll explain first point. In first point, my sum assured is 4 lakh. So 10 and policy taken after 1st April 2012. So I need to check whether my premium is less than 10% of sum assured or not. My sum assured is 4 lakh. My premium is 1,25,000 and 10% of sum assured is 40,000. So my premium is more than 40,000. Yes or no? Yes. That's why my maturity is taxable. My maturity is taxable. So 194 DA is applicable. TDS is required to be deducted. Now TDS is required to be deducted on which amount? So maturity amount minus premium paid. So 4,50,000 is maturity amount. 1,25,000 premium paid for 3 years. So total premium paid is 3,75,000. So balance is 75,000. On 75,000, 5% TDS is required to be deducted. Is that clear? Yes, Bhumika. In second case, TDS is not applicable because premium paid is less than 20% of sum assured and entire maturity is exempt on that. Clear? Sushil, clear your doubt? Yes or no? Please answer fast. Chalo, third point. Mr. Z, a resident, is due to receive 95. Yes, Mohammed. That is a separate thing. Mr. X, a resident, is due to receive 95,000 on 1/8/2022 towards maturity proceed of LIC policy taken on 1/8/2016. Now the policy is taken after 1st April 2012. Yes, Sushil. For which sum assured is 90,000 and annual premium is 10,000. Now policy taken after 1/4/2012. So we need to check whether the premium is less than 10% of sum assured or not. Now the sum assured is 90,000. 10% of 90,000, 9,000. My premium is 10,000. Premium is more than 9,000. Yes or no? Yes. The maturity is taxable. Yes. Whether TDS is applicable or not. Here the TDS is not applicable. Why, my dear friend? See, maturity is taxable because my premium is more than 10% of sum assured, but 194 DA is not applicable. Why? Because the maturity amount is 95,000, that is less than 1 lakh. That's why TDS is not applicable. Okay. So in this question, market important, we have covered all the 3 points. The maturity is exempt, the maturity is taxable and TDS is applicable. The maturity is taxable, but TDS is not applicable because the maturity amount is less than threshold limit. Clear everyone? Yes or no? Everyone clear? Just go through once. We'll discuss next section 194E after that. If you have any doubt, please let me know. TDS is calculated on maturity amount, whatever amount you will receive at the time of maturity minus premium paid, not on sum assured, because maturity के time पे आपको you will receive bonus also. Okay, Mohammed. Mohammed, clear? Please reply. Chalo. Next is section 194E, that is payment to non-resident sportsman or sports association. So if you are making any payment to resident sportsmen, then this section is not applicable. This section is exclusively for any payment to non-resident sportsmen or sports association. See, in India at the time of IPL, they are the non-resident sportsmen will perform, they will make the ad or play the IPL. Okay. So whatever amount is paid to them, that should be on that amount, the TDS is required to be deducted under section 194E, and the rate of TDS is 20% plus cess plus surcharge 4%. So here the TDS is required to be deducted on 20.8%, that is 20% basic rate plus 4% health and education cess. The deduction is at the time of payment or credit, whichever is earlier. The TDS is required to be deducted on any payment made to them, that is for playing IPL, for making advertisement, for giving article in the journal, whatever it is. Okay. So illustration 5, calculate the amount of tax to be deducted at source on payment made to Ricky Ponting. Ricky Ponting, an Australian cricketer, non-resident in India. So 194E आएगा? Yes. By newspaper for contribution of article rupees 25,000. Here no threshold is given. So if you are making payment of 1 rupee, then also TDS is required to be deducted. Now here the payment is made to Ricky Ponting, non-resident cricketer. Yes or no? Yes. The amount of payment is 25,000. Yes. The rate of TDS is 20% plus 4% cess, that is 20.8%. So TDS is required to be deducted at the rate of 20.8% on 25,000, which comes to 5,200. Is that clear, everyone? Yes or no? Yes or no? Everyone clear with 194E? It is very simple section. Next is payment in respect of deposit under National Savings Scheme. If you are depositing any amount under National Savings Scheme and you are withdrawing amount from your national NSS account, then at the time of payment, the NSS will deduct TDS at the rate of 10%. If you are receiving amount which is less than 2,500, then TDS is not required to be deducted. 20 plus 4%. 20 plus 4% karo, it comes to 20.8. 20 basic tax rate plus 4% health and education cess. So if you are withdrawing any amount from your NSS and the amount is more than 2,500, then NSS will deduct TDS at the rate of 10%. If legal heir of the assessee, say for example, Mr. X is having account in NSS and Mr. X passed away, and his legal heir withdraw the amount from his NSS account, then this provision is not applicable. What is 7,000, Varsha? What is 7,000, Varsha? I didn't get your question. Next is repurchase of unit by mutual fund or unit trust of India. See, if mutual fund is buyback their units, then they are making payment to unit holders. Okay, so at the time of making payment, they will deduct TDS at the rate of 20%. Chalo, next is commission on sale of lottery tickets. We have discussed one commission, 194D, that is insurance commission. Second, 194G is commission on sale of lottery tickets. If you Mohammed, advance tax is paid by yourself to the government and TDS will be deducted from your service payment. So it is deposited by someone else on your behalf and advance tax is deposited by yourself only. Commission on lottery tickets. So the seller of lottery tickets will get the commission on sale of lottery. I think it is if you see the movie of Malamal Weekly, and Paresh Rawal is selling the lottery tickets and he will get the commission on sale of lottery tickets. Okay, so the seller of lottery ticket will get the commission on sale of lottery tickets. If the commission is more than 15,000, then the payer of commission will deduct TDS at the rate of 5% on payment or credit, whichever is earlier. The TDS is required to be deducted at the time of payment or credit, whichever is earlier. Again, the same provision is here. Earlier, it was on insurance commission. Here, it is commission on sale of lottery tickets. (194H) is general commission, other than insurance commission or lottery ticket. Any kind of commission you will get. Say, for example, some products are sold by you and you will get the commission. Okay, then 194H is applicable. Here also entire provision is same. The rate of TDS is 5%. The threshold limit is 15,000. The time of deduction of tax is payment or credit, whichever is earlier. The only benefit is given here is to those individual and HUF who are making payment of commission, but in last financial year, if they are doing business and their turnover is less than 1 crore, or if they are doing in profession and their gross receipts are less than 50 lakh, then in current year, at the time of making payment of commission, they are not required to deduct TDS. That's only the benefit is given here. Other than that, if entire provision is same as we discussed earlier. Is that clear, everyone? This television channel point we have already discussed at the time of section 194C, that advertisement agency to client to advertisement agency and advertisement agency to television channel, that I have already explained earlier. Right, so we will discuss the illustration of this point, but up till now it is clear, everyone. So we'll move forward to illustration number 6. Yes or no, please let me know fast. Everyone, please let me know. Up till now it is clear, yes or no. Everyone, please answer. Up till now it is clear or not? Mohammad, Varsha, Sudhanshu, Sushil. Yes or no? Please answer, my dear friend. Moon TV, a television channel, made payment of 50 lakh to production house. 10 minutes. For a production of program for telecasting as per specification given by channel. The copyright of the program is also transferred to Moon TV. Would such payment be liable for tax deduction at source under section 194C? Yes or no? Now here, my dear friend, now Moon Television channel is making payment of 50 lakh to production house for making production as per their requirement. Okay. So here it is a contract because the copyright is also given to Moon TV and the production, the program is also developed as per the specification of Moon TV. So it is a contract. 194C is applicable, right? Also, examine whether the provision of, so in first case, 194C is applicable. Whether the provision of tax deduction at source under 194C would be attracted if payment was made by Moon TV for acquisition of telecasting right of the content already produced by the production house. Now, in second case, the content is produced by production house as per their wish, right? So here what Moon TV will do, only purchase the television telecasting right. Okay, so in that case, in second case, there is not a contract. Okay, so in second case, 194C is not applicable. Sushil, 194H is applicable for general commission. Say for example, एक कोई product आप sale कर रहे हो and you will get the commission on sale of that product. Then if your commission is more than 15,000, the payer of commission will deduct TDS at the rate of 5% on that commission. It is general provision for commission. Is that clear, Sushil? Chalo, opt-in now, it is clear, everyone, yes or no? So we'll move forward to section 194I. (194I) is rent. If you are paying rent to any person, then you are required to deduct TDS. Okay. So if you are paying rent for plant, machinery and equipment, then you are required to deduct TDS at the rate of 2%. In any other case, say for example, if you are paying rent for commercial office or for land or for building or for furniture, then you are required to deduct TDS at the rate of 10%. But here, my dear friend, again, the relaxation is given to those individual and HUF whose turnover in last financial year is less than 1 crore or professional receipt in less than in last financial year is less than 50 lakh. Then in current year, if you are paying rent, then TDS is not required to be deducted. The TDS is required to be deducted at the time of payment or credit, whichever is earlier. Threshold is 2,40,000. Mohammed, please ask the question when the answer is discussed. When I am discussing the next provision, you are questioning for previous provisions. In Moon TV wala example, in second case, they are purchasing only telecasting right. They are not giving contract for production of advertisement. They are just purchasing the telecasting right on for the already produced content. That's why it is not a contract. It is a sale of goods only. So coming to rent, the threshold is 2,40,000. So if you are paying rent more than 2,40,000, then only you need to deduct TDS. Otherwise, TDS is not required to be deducted. Now my question is, if you are paying storage charges to cold storage owner, then whether it is a rent or not. CBDT has given the clarification that it is not considered to be a rent. Why? Because the purpose of using cold storage is to store your perishable goods, not the premises, because you are not allowed to enter the premises without the permission of owner. You cannot put your goods in any way. You cannot use that premises as per your wish. Okay, that's why cooling charges paid to cold storage is not treated as a rent, and 194I is not applicable. Is that clear? Again, no TDS is required to be deducted on passenger service fees paid to airport operator by airlines. Now the service tax is not there, only the GST is there. So TDS is not required to be deducted on GST component. TDS is required to be deducted only on basic value. Say for example, your rent is 3 lakh and on rent 18% GST is charged. So you need to deduct TDS on 3 lakh only and not on the GST component. Is that clear, everyone? If you are paying lump sum payment for acquiring long-term lease, and the lump sum payment is not adjusted against your monthly rental charges, okay, then TDS is not required to be deducted on on lump sum lease payment. It is required to be deducted on monthly lease charges. Is that clear, everyone? Yes or no? Everyone is clear up till now? So we'll discuss the last section of today's session, that is 194IA, payment on transfer of certain immovable property other than agricultural land. Why other than agricultural land? Because capital gain on sale of agricultural land is exempt. Because capital gain on sale of agricultural land is exempt, that is rural agricultural land. That's why this provision is not applicable to transfer of immovable property being agricultural land. Chalo, everyone up till now clear? Yes or no? So here, if you are purchasing any immovable property, so being a buyer, you need to make payment to the seller. Yes. And if your purchase price or stamp duty of value of property is more than 50 lakh rupees. Say for example, I am purchasing a property worth rupees 70 lakh rupees and the stamp duty value is also 70 lakh. Okay. So the value of property is more than 50 lakh. Yes. Then I need to deduct TDS at the rate of 1%. So here the buyer is need to deduct TDS at the rate of 1% if the purchase price or stamp duty value of property is more than 50 lakh. You need to deduct TDS on entire 70 lakh rupees. This section is not applicable if the consideration or stamp duty value of property is less than 50 lakh. Say for example, I am purchasing a property worth 40 lakh rupees. Then TDS is not required to be deducted because my consideration is less than 50. Okay. Now this section is not applicable in case of compulsory acquisition of property. Why? For compulsory acquisition, the separate section 194LA is given. So 194IA is not applicable in case of compulsory acquisition of immovable property. See, if you deduct TDS, then you need to inform the government that I have deducted TDS of that person, and that information is given through your TAN number, that is tax deduction account number. But in this case, TAN is not required to be obtained. You can inform the government through your PAN only. Okay, let us discuss the illustration number 7. Mr. X sold his house property in Bangalore as well as his rural agricultural land for a consideration of 60 lakh and 15 lakh respectively to Mr. Y on 1/8/22. So for rural agricultural land, no TDS because capital gain is exempt. He has purchased the house property and the land in the year 2021 for 40 lakh and 10 lakh respectively. The stamp duty value on the date of transfer, that is on 1/8/22, is 85 lakh and 20 lakh for the house property and rural agricultural land respectively. Examine the tax implication in the hand of Mr. X and Mr. Y and TDS implications, if any, in the hand of Mr. Y, assuming that both Mr. X and Mr. Y are resident individual. Indian. Now, first in case of Mr. X, he has sold the property, so he will we need to calculate the capital gain. Yes. So on sale of house property Bangalore, consideration is 60 lakh. Stamp duty value is 85 lakh. Right? Here, the stamp duty value is more than 110% of sale consideration. Right? So as per section 50C, deemed sale price is 85 lakh rupees. The holding period is less than 24 months. So our deemed sale price 85 lakh rupees and 40 lakh is our cost of acquisition. So 45 lakh is short-term capital gain. Everyone knows 50C, right? Now in case of Mr. Y received immovable property for inadequate consideration, right? So in case of Mr. Y, 85 lakh minus Mr. Y paid 60 lakh as consideration. So 25 lakhs is income chargeable under section 56(2)(10) as other sources. Yes or no? Now in the hand of Mr. Y, TDS is also applicable. Why? Because the stamp duty value of property is more than 50 lakh. It is 85 lakh. So on 85 lakh, Mr. Y need to deduct TDS at the rate of 1%, that is 85,000. Is that clear, everyone? Yes or no? Please reply. And the second is rural agricultural land. So neither the capital gain is applicable nor the TDS is applicable. Everyone clear with this provision? Yes or no? Please answer fast. Bhumika, Mohammed, Varsha, Sushil. Please answer, everyone. I will end the session within 2 minutes. Please answer if you have any doubt. Mohammed, clear? Yes or no? Mohammed, Sushil Kumar, yes or no? Please reply fast. See, Varsha, if you are purchasing any immovable property, then your sale price or stamp duty value, whichever is higher, is more than 50 lakh, then you need to deduct TDS at the rate of 1% on the higher value. Say, for example, in this case, Mr. Y is purchasing house property for 60 lakh and the stamp duty value is 85 lakh. So whichever is higher. So higher is 85 lakh. 85 lakh is more than 50 lakh? Yes. So Mr. Y need to deduct TDS at the rate of 1% on 85 lakh rupees. Whichever is higher, Mohammed, stamp duty value or consideration, whichever is higher, the TDS is required to be deducted on higher value at the rate of 1%. Parsha, clear? See, we can claim the TDS credit from our total tax liability. Say, for example, my total tax liability comes to 1 lakh and 30,000 in TDS is already deposited on my behalf to the government. Then balance 70,000 I need to pay. Clear, Jai? See, my dear friend, we are filing return at the year and government will use that fund for the entire year. And it is not compulsory that the entire TDS will be refunded. If there is a tax liability, then it is our taxes go to the government only. Ultimately. Clear, Jai? Clear, Mohammed? Doubts are clear? Yes or no? Please reply fast, everyone. Mohammed, Jai, your doubts are clear? Yes or no? Please reply. Mohammed, Jai, please reply whether your doubts are clear, yes or no. Jai. Jai, you need to calculate your tax liability and आपको tax liability में से TDS minus करके balance pay करना है. If your TDS is more than your actual tax liability, then you will get the refund. There is no correlation between total income and the TDS because TDS is required to be deducted by payer as per the specific provision irrespective of your total income. Say for example, my total income is 2,50,000 and I am giving professional services to the for 50,000, then also they will deduct TDS at the rate of 10%. So ultimately my tax liability is 0. Okay, so I'll get the refund of that 5,000. So there is no correlation between total income and TDS. TDS credit will be available from your total tax liability. So for example, my 5,000 TDS is deducted, but my tax liability is 0. Then I'll get the refund of that 5,000 rupees. Now say for example, my tax liability is 7,000 and my TDS is 5,000. Then I need to pay additional 2,000 to the government. Clear, Jai? Yes or no? Jai, please reply. Clear, yes or no? Mr. Anil, you need to refer section 50C in your capital gain chapter for stamp duty value and 110% of stamp duty value. So have a good day everyone. I'll end the session. Mr. Manish, we